Good morning. Today is Sunday, January 26, 2025, and this is the weekly Bitcoin price forecast, looking at where Bitcoin went in the last week and where it could potentially go in the future. So this is the monthly chart. And as you can see, January has been a relatively good month. December came down after a huge run up in November. And now it's just, kind of stalling out around 100,000, which, I've been talking about for a while. 100,000 is a very key level. It's a very, strong psychological level. Everyone looking at that nice round number. But at this point, we've held above 100 for quite a while, and I think we're just kind of bumping up against this little resistance right here that was, put in place in November. But once we get past that, yeah, it's going to be smooth sailing for sure. Like I said, there's not going to really be much to stop it. I'm not going to go too much into it today, but there's been a lot of movements politically. It'd be way too much to talk about in this video. I may make my a separate one potentially, but yeah, there was a lot of political action with executive orders coming through and the inauguration happening on Monday. So I mean, the Trump administration really did come out the gate pretty strong with appointing Bitcoin chairs for digital assets. Senator Loomis from Wyoming, and I think there were some other executive orders on Bitcoin as well. But we'll have a chance to look them up at some point and maybe kind of dive into each one and understand what it does for the crypto space. But for now, we'll kind of stay on track with this. Again, January, good month. Let's go down to the weekly chart. See what we got here. Again, very hard line in the sand at about 92,000. We see right here, it just kind of falls off. And then, again, some resistance right here. You form the top up at about 104. So it makes sense why it's bumping up right there. You can put on the charts real quick, the drawings. We've broken above these three lines, and now the last one that we're dealing with is this upward channel that has come up and down. Then you had the bull flag, and then it just ended up going up again. So that was this channel. But actually, if you want to draw another one, I don't know if that's too much, but let's see if we go from right here to about right there. That might be cutting a little bit close. Let's see, maybe from right here. If we do something like this, then you end up with a channel of sorts. Then it comes back down to here, and then you see it's on the way up too. So let's actually change this to green. That's too light. It's this one. This is the green I want. So let's change that to green, and this one to this. And we see there's been a shift in the speed, pretty much the velocity. So actually, I'll go ahead and delete that one. Make this a little bit cleaner. So let's say that it went up to here, it came to the other side of this, and now we see once it tapped this lower end, it did start to go up. And again, I don't really expect it to come down too much. Maybe it might range over to this side, but even again, I think that's going to be sooner than later, where a lot of this price discovery is going to happen. So pretty soon we'll be able to delete this yellow line. I'm sorry, the white line that was like a trend line actually. Let me show you where that came from. So that just came from if I just drew a line from here all the way to here to here to here. And then it just kind of shows right here. So it makes sense why it's running up into a stopping point right there. In the past, this has shown the peak, but I can tell you right now, we're not even close to the peak right now, which I believe this market is going to be different. This go around is going to be a little bit different to where we just start to break in all types of unprecedented levels, because I think this may be, at least, if not fully, but at least the start of the global adoption phase, because now that America is so on board, everyone else pretty much has to be, if they want a strategic advantage in the future. So they're going to do what they can to get their hands on as much Bitcoin as possible and really get into the other crypto spaces too. So again, this is the daily chart. So a whole bunch of bouncing here. We see 92 couldn't really be moved around too much. You had this one major, final crash down to, the 100 moving average and this upper trend line if you're drawing from right here. So really there wasn't too much hope to go too much lower, even to 84. So, I mean, this looks like these intersected around 88. Yeah, and again, you see it really just kind of rode this white 50 moving average right here. And then just bounced up to the top. So, I mean, this is beautiful price action. You see kind of a double bottom right here and then a launch to the top. And then you see it's just kind of slowly inching up there. It's inching up, and I'll go down to the 4-hour chart and we can draw a trend line up here and see what that looks like. So. 4-hour moving. Oh yeah, so this is your 4-hour charts. 4-hour chart right here. I don't want to do that. That's not what I want to do. that is what I want to do, except I need to take this extension off. So anyway, you have a bit of a trend line right here. Kind of like this upward movement. Let us not extend that line. Boom, 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 boom. And then potentially, maybe another comeback down to 103 before I really taken off to that upside. And we see we've kind of broken through it for some space. Like, we did that on last Monday for the inauguration, but couldn't do it. But, every time this gets tapped, it gets weaker. So I see this consolidation happening right here. And then I just see a price release pretty soon after that. Like, I don't think there's going to be too much waiting around, really. Okay, so yeah, I think that's enough of that. That we don't really have to talk about too much more. Again, just expecting maybe a pullback down to 100 one more time, or one final flush out potentially. But I really do think that we're just going to end up going to the upside. So, and then maybe hitting this line again, 118, stalling for a quick second, and then we'll be on our way. The big thing this week was, again, the inauguration on Monday. Tuesday, Wednesday, nothing. A lot of executive orders got signed in this time period. Thursday, the big one was the Bank of Japan, their policy rate. So that actually on Thursday at 9 p.m. ish. It says 10:30 p.m. Maybe it's Eastern. Yeah, so this is like 9:30 p.m. Central. This ended up coming out. The big thing was the policy rate. So the Bank of Japan ended up spiking their rates from 0.25 to 0.5, which is the highest level that they've had since 2008. I don't know if I can zoom out any further than that. It doesn't look like it, but this is the highest level that they've recorded since 2008. So their interest rates are rising, meaning that the yen is becoming more strong. So that has global implications because one of the big trades out there is the yen carry trade. So the U.S. and Japan have a good currency relationship to where a lot of U.S. investors find the yen to be attractive because they can get it virtually for free or have been able to for a long time. You see all these pretty much free interest rates, and then over time, okay, well now the yen is getting more expensive, so maybe that trade isn't the best. And what I'm referring to is really the yen carry trade. So that is where, and I think they did a good job explaining it here. So in the yen carry trade, the investor borrows Japanese yen at a relatively low interest rate, so they're borrowing cheap money, converts the proceeds to another currency such as the US dollar or maybe the euro or the pound or something like that, where the funds are invested at a higher interest rate for a term. So if the US interest rate is at like 4.5% and you can get the yen for like 0.25%, all right, well, you have an arbitrage there. Or, most currencies, they're yielding somewhere around like 4 to 5%. So that is it's a pretty easy trade to understand. So it's like you borrow cheap money and then invest it in expensive money. Or expensive money or higher interest money, which would be things like the US dollar and like, other currencies like I just mentioned. So it's about interest rates here. So at the end of the period, the investor exchanges the dollars back to the yen to repay the loan. Pocketing the difference is arbitrage profit. So like they're basically getting the interest profit off of that. If the spot rate at the end of the period is roughly the same as when the start, or the yen has fallen in value against the dollar, the investor profits. So basically, if the yen gets weaker, then the investor will profit if they've done this arbitrage, or if the yen pretty much stays in the same range. So they'll just kind of eat off of the interest pretty much. If, however, the yen were to appreciate versus the dollar over the period, the investment may result in a significant loss. So suddenly, if the yen starts to gain an interest rate or it gets more appealing to outside investors for the strength of its currency, then the yen carry trade actually goes into reverse and people start getting out of the yen for, they start reversing their trade pretty much. So like, they had dollars and, they got the yen and they ended up getting the yen, invested it into dollars at a higher interest rate. And then now they're doing the reverse. So it's like there's going to end up being a lot of currency circulation over the next coming weeks, pretty much. And I think there was a heads up with this yen carry trade. Like, it wasn't a surprise necessarily. They had been hinting at, raising rates for quite some time, the Bank of Japan. But, now to see that they're actually doing it, so it's in motion. So will be interesting going forward to see like what they ended up doing here and how that ends up affecting the global market. So there was maybe one more thing here that was kind of good, maybe the graphic. So, what is the yen carry trade? Again, borrowing yen, convert to higher yielding currency, invest in higher return assets, and you're basically exploiting interest rates and differentials for profit. If the Bank of Japan has a policy shift that raises their interest rates, that could unwind the trade and basically higher Japanese interest rate. And then there's a lower profit margin. So investors start to seek elsewhere. It's not that the trade is bad, but they may just find something else that's more appealing because at this point, U.S. interest rates are going down and Japanese, yen interest rates are going up. So that differential is shrinking. So the trade isn't as lucrative anymore. Let's look at this another chart. So this is not Bitcoin. So I'm kind of going on a tangent here. The thing is, Bitcoin's going to go up. But let's talk about something in the other global markets pretty much. So this is a chart of the U.S. dollar versus the Japanese yen. And really, if I look at this is a daily chart. So really, for the past since October, it's been in somewhat of a range. And now we see it's like kind of topping here. I see, it may end up coming back down to the bottom here, but I see pretty much that. Now that we have this interest rate decision, you could have a stronger yen against the dollar, which could bring it back down to 151. Probably, again, you'd have to get through all these moving averages and whatnot too. But, you get back down to 151, and I don't know how long it'll end up coming down, but that should end up sending this chart down a little bit from a fundamental basis and understanding how the market moves. But, overall, even this has been an ascending channel pretty much if I look at it. So, something like this, something like that. Maybe a little tighter. Yeah, I think that's better. So yeah, I mean, again, you have like these different movements. So you could come back down here, even down to like 147 before rising back up. We'll see how that goes. It just depends on what the different policy decisions are. And even speaking of going back here, I was talking about them. The U.S. coming up to next week, they have a federal funds rate decision on Wednesday afternoon. They're projecting 4.5%, so not a rate cut, but a rate pause pretty much. So we'll see how that ends up shaking out, especially with Japan's decision. So I think they'll probably end up pausing there, not sinking. So yeah, just interesting to look at the Japanese yen. I don't have too much commentary on this one, but kind of a range within a range there. But it is overall, for the last 4 years, really. Was it 2025? So the last 3 years, really, we see that the yen has been on a constant decline against the dollar pretty much. And I know this chart is going up, but if this chart is going up, that means the yen is getting weaker and the dollar is getting stronger, and vice versa. So that's that. And then, I mean, if we just want to look at pure dollar strength, pretty much in the same time frame, right? This is a weekly chart. The dollar has been stuck in a range of like strength. So this is the Dixie, the U.S. dollar index. It's been stuck in a range really for the past 3 years almost. So like this is the beginning of 2022, and it had a big run into the 2022, and it was really strong here because like I think we were like raising interest rates at a very high clip here at this point, so it did reach a point of maximum strength, and then like you pause for the rate hike. So I think around March. Was it around? Yeah, it was around March of 2022. It just went on a major run because we were raising interest rates at that point. And then we brought them down and so on and so forth. But over time, the U.S. dollar has kind of inched back up too. And we've actually broken out of this range for the first time in all these years. You could see a retest here and then, a gaining of more strength, especially now that Trump is back in office. There are signals of strength that are emerging from this. So we'll end up seeing how that ends up turning out. Who knows? But yeah, no, that's pretty much all I got for today. Like I said, big story. Bitcoin's going up. Just wanted to investigate the U.S. dollar Japanese yen relationship there and how that could affect our markets. I do expect it to put somewhat of a slowdown on our markets, on the U.S. markets a little bit, but we'll end up seeing how that ends up shaking out. So again, I think there's a lot of good times ahead, especially for those who take advantage. So again, this has been Chris Talks Crypto. Check out any crypto-based resources on christalkscrypto.com. Check out the Escape Velocity Bootcamp and all things Pulse on Crypto. And I will see y'all on the moon. Take care. Bye-bye.